to this week's Global Financial Friday on the Charlie Ward Show, where we break down the latest market trends, economic challenges and political shake-ups shaping the world financial landscape. From the United States to Zimbabwe, no country is immune from the shifting tides of trade tensions, economic restructuring and technological upheavals. Today, we explore major financial developments, assess their implications, and provide an outlook on what's ahead. Buckle up, it's a wild ride through the global economy. So, going around the world in 20 minutes, starting in the UK. The UK's banking sector is in turmoil, with major institutions like Lloyds and Nationwide experiencing IT failures that left customers stranded. The UK banking system needs urgent digital infrastructure investments to avoid further customer disruptions. Expect continued volatility in the financial sector, but also opportunities for fintech companies to step in and modernise outdated systems. Going to Canada, US tariffs are sending shockwaves through Canada's financial sector. Banks in Ottawa are lobbying for reforms, fearing they could be caught in the crossfire between American and Chinese economic policies. The outlook: Canada must balance its trade relations carefully. If negotiations go well, Canada could secure a better position in North American trade. However, if tensions persist, domestic industries could face major challenges. Whizzing over to Germany, the struggle bus keeps rolling. Germany's economy has contracted for 2 consecutive years, with stagnant wages and high energy prices crippling growth. A labour shortage is further exacerbating economic woes. The outlook: without major policy changes, Germany risks a prolonged period of economic stagnation. Investments in renewable energy and workforce reforms could help, but recovery will be slow. And prodding along to China, power moves and interest rates shenanigans. China is tightening up regulations on its chip industry while cutting interest rates on US dollar deposits to remain competitive. These moves signal a strategic shift in its economic policy. The outlook: while China's economic controls could stabilise its industries, increased regulatory scrutiny may deter foreign investment. The ongoing US-China trade rivalry will remain a critical factor. Sliding to Japan, Japan's economy is showing signals of recovery, but a shrinking workforce and shifting US trade policies could disrupt progress. The outlook: Japan's resilience has kept its economy stable, but for long-term demographic changes remain. Expect continued innovation in automation and trade diversification strategies. In Taiwan, Taiwan's stock market is experiencing volatility due to geopolitical concerns and global semiconductor demand. The outlook: as a key player in the semiconductor industry, Taiwan's economic health depends on global demand and diplomatic stability. Market fluctuations will persist, but long-term growth remains promising. In Zimbabwe, Zimbabwe continues to struggle with economic instability, with fluctuating policies making investors wary. The outlook: while recent policy shifts aim to stabilise the economy, hyperinflation means a looming threat. Sustainable reforms and foreign investments are crucial for long-term growth. Whizzing to Vietnam, Vietnam is skillfully adapting to shifting global trade trends, attracting foreign investment despite uncertainties. The outlook: Vietnam's growing role in manufacturing and global supply chains make it a country to watch. With stable policies, it could emerge as a stronger regional economic player. In Iraq, Iraq is set to restart oil exports through the Turkey-Iraq pipeline with 185,000 barrels per day. This decision follows a long-standing dispute between Baghdad and the Kurdish regional government that led to a year-long halt, costing the region around $20 billion. The move is seen as crucial for improving relations between the two governments and revitalizing their economies. US and Russian support has played a role in overcoming obstacles to this agreement, which is expected to stabilize the region and meet federal budget expectations. XRP will be part of a digital strategic reserve under President Trump's leadership. The US Treasury is redesigning banknotes for purchasing digital assets. This initiative aims to establish a digital asset reserve system. The redesigned notes will facilitate investments in digital assets like XRP and Ethereum. The Treasury will manage and secure these reserves, positioning the US as a major player in cryptocurrencies. The redesign process outlined in the Treasury Order 101-17 reflects a transition to a banking system embracing digital assets. Recent reductions in physical currency circulation are part of a strategy for a new digital asset banking system. Recent reductions in physical currency circulation are part of a strategy for a new digital asset banking system. This is linked to a broader global currency reset. And just a reminder, no RV this week. Now, heading over to Australia. Australia is grappling with high inflation and rising interest rates, leading to economic uncertainty. The outlook: unless inflation is controlled, consumer spending and business investments may suffer. Government intervention could play a crucial role in stabilising the economy. And moving to the little island of Cyprus and the rest of the EU. Cyprus is closely monitoring financial trends in the Middle East and EU, whilst the European Union itself is assessing the impact of US tariffs. With trade relations at a critical juncture, how will Europe respond to shifting global economic forces? Now, over to some more noteworthy financial headlines. Billionaire Ricardo Salinas has allocated 70% of his portfolio to Bitcoin, with the remaining 30% invested in gold. On Wednesday, March the 5th, President Donald Trump made several significant announcements addressing trade policies, foreign affairs, and domestic initiatives. The trade policies: tariff delays. The administration announced a one-month postponement of the planned 25% tariffs on automobiles imported from Canada and Mexico, originally set to take effect on April the 2nd. This delay aims to provide automakers additional time to adjust and mitigate potential economic disruptions. The impact on the markets: the announcement positively influenced financial markets, with major indices such as the Dow Jones, Nasdaq and S&P 500 experiencing gains. Notably, shares of Ford and General Motors saw significant increases. Under foreign affairs, intelligence sharing with Ukraine. The US suspended intelligence sharing with Ukraine following the halt of military aid, affecting Ukraine's defense capabilities against Russian aggression. The administration indicated that aid and intelligence support might resume if progress is made in peace negotiations. The stance on Hamas. President Trump issued a stern ultimatum to Hamas, demanding the immediate release of hostages and the return of deceased individuals, emphasizing unwavering support for Israel. Domestic initiatives. In the shipbuilding industry, the administration is preparing an executive order to bolster the US shipbuilding sector to counter China's dominance in global shipping. Proposed measures include imposing fees on imports arriving on Chinese-built ships and offering tax incentives, grants and loans to enhance domestic shipbuilding capabilities. And rehiring of federal employees. The US Department of Agriculture is reinstating 6,000 employees previously dismissed as part of workforce reductions, signalling a shift in domestic policy priorities. These developments underscores the administration's focus on adjusting trade strategies, addressing international conflicts and strengthening domestic industries. The White House crypto Caesar David Sachs has revealed that the US government sold 195,000 BTC over the past decade for his $366 million, an amount now valued over $17 billion. Now, over to some juicy news. The White House Crypto Summit today, the 7th of March 2025, the US Digital Asset Strategy. The upcoming summit will address major cryptocurrency policies, including a potential US crypto strategic reserve and regulatory shifts. The outlook, if regulations are eased and tax incentives are introduced, expect a bullish trend in digital assets. However, if policies remained stringent, investor confidence could wane. So here's a quick overview of what we might see. First, President Trump is set to unveil the US Crypto Strategic Reserve, will include major currencies like XRP, Solana, ADA, BTC, and Ethereum. We're expecting details on how these assets will be managed. Next, the speculation that the SEC's crackdown on crypto might come to an end, especially with influential figures from Ripple and Coinbase. This could lead to a clearer regulatory framework for cryptocurrencies and exchanges. Additionally, Trump aims to position the US as the global crypto capital, possibly introducing lower capital gain taxes on crypto to encourage investments. Stable coins will also be a hot topic, particularly with Tether's Paolo Ardoino in attendance, indicating that Tether and Circle could play a significant role in US digital dollar transactions. Lastly, with notable investors like Michael Saylor and Cathie Wood there, we might see a push for Bitcoin as a US reserve asset and a broader integration of blockchain into our financial systems. If the summit's announcements are favourable, we could witness a crypto bull run, making it a pivotal moment for the US crypto landscape. Keep an eye on those key cryptocurrencies. They could be on the rise. Now, over to global trade tensions and economic shifts. The escalating trade tensions initiated by the US are significantly altering the landscape of global commerce. The US has implemented a 25% tariff on all imports from Canada and Mexico, and it has increased tariffs on Chinese products from 10% to 20%. This development signals a major transformation in international trade, indicating the decline of the previous economic framework. In retaliation, China has imposed tariffs ranging from 10% to 15% on American agricultural goods and has placed 15 US companies on its export control list. Now, over to Canada. Canada has also introduced its own countermeasures, further escalating the trade conflict. Additionally, the US is contemplating imposing protective tariffs on goods from the European Union and mirror tariffs on imports from countries that have higher tariffs than those set by the US. This situation transcends individual countries' disputes and represents a comprehensive reworking of global trade regulations. The World Trade Organization, WTO, which has been a fundamental pillar for global trade, is now facing critical challenges as its significance diminishes in the new landscape. This trade war is not merely an economic struggle, it signifies the dismantling of the global system established by part of US administrations. The established world order is disintegrating, making way for a new and unpredictable reality. Trade tensions will continue to shape global markets. Companies must adapt to new economic models or face significant challenges. The IRS on outdated COBOL systems is raising concerns about data security and inefficiencies. A proposed 90-day operational freeze aims to modernize IT infrastructure. The outlook: a successful upgrade could enhance efficiency and security. However, delays or budget mismanagement could leave vulnerabilities unaddressed. Now on to strategic investments and financial movements. BlackRock's $23 billion purchase of Panama Canal ports increases US influence in the global trade. Meanwhile, Goldman Sachs and JP Morgan are reintroducing Russian ruble derivatives, signaling a shift in investors' confidence. The outlook: strategic acquisitions and renewed investments in emerging markets could shape global economic trends in the coming years. Bitcoin as a strategic asset? Michael Saylor continues to advocate for Bitcoin as a US reserve asset, while critics warn against government control over decentralized cryptocurrencies. The outlook: Bitcoin's role in financial reserves will depend on regulatory clarity and government adoption. If institutional support grows, Bitcoin could cement its place as a mainstream financial asset. And my final thoughts: the global financial landscape is shifting rapidly, driven by trade policies, digital transformations, and economic realignments. As markets adapt to new challenges, staying informed is more important than ever. Whether it's a banking crisis in the UK, inflation woes in Australia, or crypto innovations in the US, every development carries a ripple effect across the global economy. And remember, no matter how complex the financial world gets, at least we're not trading in seashells yet. Stay tuned for more updates, and may your investments be stable as a Swift bank account. And for more of an in-depth report on cryptocurrencies, go to charlieward.com and watch XRP Boys, Paul Brooker and Zesta Zerfos for more of an update. So have a good weekend and see you next Friday. Bye bye.
Hi guys, this is a personal message from me. If you see a video on Facebook, you are following an imposter. I am not on Facebook. I have not been on Facebook since June 2020 when they removed me. Please redirect to watch all of my videos at charlieward.com. All official social media links are on my website. We urge you to stop following fake channels. I will never message you in a video. I will never ask you for money. I will never message you privately. I will never contact you directly. I will never ask you to email any information directly. I will never sell you cryptocurrency or any currency, or ask you to open a quantum financial system wallet. Please do not get caught by these scammers who are out there. I do not endorse other truthers so that an imposter can say that I've said this. I will not ask you directly or indirectly to open a quantum wallet. So please be careful. If you want to check out the validity of anything, contact us directly via our website at charlieward.com. There's a contact page there. We have a customer care team there to help you.